the main things an accountant should look for in an insurance policy, if we're talking PI, and that's where most of the focus is, certainly the key things they should be looking for are things like a cost-exclusive excess, and if you can get it, most importantly a cost-inclusive limit, which essentially means that the legal fees are covered outside of the actual limit. Really important, because the legal fees can be more than 50% of the actual claim at the end of the day. So that's a key element. The Institute of Chartered Accountants has got an excellent document on its website which really runs through the key things for a PI policy. You don't want Part 4A exclusions, those sorts of things. So at the end of the day, the PI policy is fairly crucial to a firm. You've got to read the detail. You've got to dive into the detail and get your broker to explain to you what that detail is. The main thing an accountant should be looking for in an insurance provider or a broker is really knowledge of the industry. It's an industry that's evolving and moving very quickly, the accounting profession. So you need a broker who works not exclusively in your industry, but certainly has a very high exposure to that industry. They need to be able to operate with usually a small number of professional indemnity underwriters, because they need to know those policies intimately. They need to be able to negotiate with those underwriters to make changes, and then if there's an issue, to actually work through that with those underwriters as well. There are a few specialists out there, and I guess that's the key thing, Mark, is that they really do need to know your industry well. Technology change is crucial. Underwriters aren't quick to keep up with changes in the industry, and with technology moving so fast, we're going to see gaps evolving. I mean, obviously the privacy laws have changed, and that changes your responsibilities as a firm. And insurance should be keeping up with that. We have a cyber liability as a new product which has just evolved over the last 12 months. When you think it's really designed to address breaches of your technological environment and stealing of data, that sort of thing. So technology is moving very quickly, and we need to make sure that that the insurances keep up with that. Doesn't go without, obviously the key thing that we need to ensure firms do is that they look at their operations. Resolving an issue by having appropriate operational procedures is not just important from an insurance perspective, it's obviously important from a firm perspective anyway. The limited licensing regimes, I mean, from my perspective, I think it's great. It suddenly expands and broadens the opportunity for accountants to generate revenue in other areas. It puts a little bit of regulation, I guess, around the self-managed super fund area. But from an insurance perspective, what it means is that accountants will be offering services, and indeed even now are in the position where they can offer services which are probably beyond the scope of what the insurer's concept of what a standard accounting function would be. So we need to make sure that there's no gaps there, and we also need to work pretty hard to ensure that the insurers don't tend to look at limited licensing registrants as being like a financial planner, because once you get into that sort of, once you have that focus on the policy itself, the premiums become outrageous, and so we've got to try and manage the two, ensure that the additional services and revenue streams can be brought into the accounting profession, covered under the PI policy without having a significant increase on the PI side.